Hello friends, one of the world's biggest banks bent the rules of accounting and almost got away with it. Hi, my name is Pratheej and welcome to Deep Dive into IFRS. In today's video, we are going to discuss about the RBS software capitalization scandal of 2010, which clearly teaches us the difference between smart accounting and misleading the markets. So what actually happened at RBS? In 2010, the Royal Bank of Scotland, yes, that RBS, they came under fire for how they accounted for their IT upgrade projects. So RBS was heavily investing into new systems. But here's the catch. They capitalized their internal costs as well, like admin costs, staff salaries, staff training costs, etc., which is a big accounting no-no. So on the surface, everything was fine. It looked like RBS was building its intangible asset base. But when you dig deeper, the actual picture starts to emerge. Now, what does IFRS say and why does it matter? As per IAS 38 covering intangible assets, only the developmental cost relating to an intangible asset can be capitalized. These can include things like design costs, coding costs, testing costs, etc. But what RBS did was, it included things like training program costs, employee salary for project planning costs, admin overhead costs, etc. All these were capitalized and not taken to the P&L. Now, what this essentially did was, it decreased the expenses, thereby increasing the profit. And even in the balance sheet, the intangible assets were inflated, where IFRS is very clear that only those costs that directly attribute to bringing an asset to its intended use can be capitalized. All the other expenses, whatever they are, they should hit the P&L only. Now, why would RBS do all this? This is interesting. After the 2008 crisis, RBS was under intense pressure to show some recovery. So for achieving all this, they had to show some big digital investment, inflate their intangible assets, increase their profits on paper, and meet all the capital ratios without raising equity. So capitalizing internal costs gave them all of this, but only temporarily. What was the fallout? Eventually, the numbers didn't add up. So there had to be restatement of financial statements, auditor scrutiny, and broader attention across the banking sector. So this was not just about RBS. All the financial institutions handling internally developed software had to be extra cautious after the scandal. So as finance professionals, what are our takeaways from this scandal? Number one, only developmental costs relating to an intangible asset qualify for capitalization. Number two, it's planning, training, or admin cost or whatever other costs are there, they should directly go to the P&L. Number three, while allocating internal costs, you should be extra cautious and adhere to the standards laid down by IFRS. Misjudging all these can affect everything from the investor trust to capital adequacy ratios. So that was the RBS 2010 scandal for you guys. Till I see you in my next episode, thank you for your valuable time.